Hello traders and welcome to another video review. Today is Tuesday, May 13th, 2023. Let's find out what's going on the Forex calendar today. Building consensus from the New Zealand. This data had been published overnight and deeply disappoints the market participant, minus 2.6%, while the forecast was 1.6% and the previous reading 6.6%. This is a basically terrible data from New Zealand. Jobs to applications ratio from Japan, we got 1.32 as expected. Building approvals in Australia dropped to minus 0.1%. Forecast was 2%, previous reading was minus 1. Another terrible data from the house market this time in Australia. At 1 o'clock p.m. we got the Reserve Bank of Australia Governor Love to give a speech. 2:30 there is a current account data scheduled for release from Canada. We got the S&P HPI composite data from the USA scheduled for release at 3 o'clock, and at the 4 o'clock we got consumer confidence data from the US scheduled for release, as I said, 4 o'clock p.m. The market participants expect a drop from 101 to 99 points. So because of this data here, let's take a look at the New Zealand dollar and Australian dollar. Let's just switch to the New Zealand dollar first, maybe New Zealand dollar first. So what is going on here? As you can see, reaction is very bearish. Let's find out where is the next technical support for this market. So we broke below 6,000 already, and I'm looking for the next, and I can't find any next technical support. Let's find out something on a daily, and on a daily it looks a little bit different. So first thing is, of course, the Fibonacci retracement. Okay, so let's take a look at the Fibonacci retracement here. How much did this move to the downside retrace already? So we got this low, and we got, of course, let's say that high. And as you can see, what do we have here? The retracement levels, the 50%, for example, is seen at, well, 6,020, let's say 20 pips. So we are approaching this one. Let me just put it on for you, 6,000 and let's say 20 pips. So that's the technical, that's the Fibonacci retracement. And one more, I think 61% is located roughly around the level of 5,002 pips. So this is how it looks like on a daily time frame chart. Those are the next levels for the New Zealand dollar. The technical resistance is seen a little bit higher from the current price. The technical resistance is seen at 6,079 pips. So this is the technical resistance, but the overall situation here is very, very bearish. The market trades below 150 periods moving average on a daily time frame chart. We got the cross already. Momentum is negative, and there is still a room for the momentum to move lower. So I guess that the 61% will be tested very, very quickly, maybe even by the end of this week. So Australian dollar. What is going on here? This is daily time frame chart again, and the Australian dollar is not moving down that much as the New Zealand dollar. It keeps consolidating around this technical support at 6,524. The low was made at 6,493, so it's like 31 pips below. Nevertheless, the momentum is still negative, and the bears might attack this local low sooner or later. Okay, so that was the technical support. Let me just find out the technical resistance. The technical resistance is located here, 6,567. Let's just zoom in a little bit. So that's the situation on the daily time frame chart of the Australian dollar. Only if we break above this level, we can assume that the market would jump higher in that situation. But for now, this movement to the downside looks very, very impulsive for me. The key game-changing level is 6,801, 6,809, and 6,821. This is the zone that needs to be violated in order for the Australian dollar to rally higher. So that was the Australian dollar. Because of the data from the USA, let's find out what's going on the US dollar to the Japanese yen. We got the data from the Japan. We got the data from the US later on, scheduled for release. Let's find out what is going on here. Very interesting situation when you see some sort of the bearish pressure. So we got this local high 140 and 93, and this is very, very interesting pin bar in progress, in the making. If we take a look at here, we got already bearish engulfing pattern. We got the second bearish engulfing pattern. This one might look like a pin bar on the top of the move. So maybe we are about to witness some sort of the deeper correction. The intraday technical support is 139.98. And of course, there is still like a short-term trend line. You can see this short-term trend line around here, and any breakout below this trend line, it will be, of course, another indication that the market might be moving lower. The recent biggest correction. Let me just take a look at this. The recent biggest correction was roughly about minus 0.95. So any breakout below the level of, let me just find out, the level of, from that high, minus 9, there you go, this is the level of let's say 95, 139.59 would mean that this is the next bigger correction in progress, and we have the overbalance of price and time on the US dollar to the Japanese yen market. And last but not least, let's take a look at the Bitcoin. Of course, what is Bitcoin doing? We got very nice rally here towards the level of 28,325. That was the technical resistance. The market didn't actually hold above this this level, but it's still trying to move above this this technical resistance. Of course, we got the nice pullback to the downside. However, this pullback might be a little bit deep, but you know, the rally was big enough as well. 3% pullback, or maybe even more than 3%. Yeah, 3.15. We are still doing the impulsive movement to the upside. Nevertheless, the market needs to resume the up move very, very quickly, because what we have here is the extremely overbought market conditions. So any reversal from here will be perfectly fine, and we should test the lower levels. The support, if the level of 20, let's say 27,550 is violated, the next technical support is seen at the level of 26,941, and this is the place where you can see some sort of the alignment with the moving averages. Sorry. Just forgot the word. Moving averages, 150 moving averages. They are around this level as well. So please keep an eye on this this level here. We might have some kind of a pullback in the momentum as well, and then the market should resume, of course, higher. So that's the situation for the day of the Tuesday of 13th of the May 2023. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.